Have you been looking into investing gold via sovereign gold bonds? Well, you can do that starting today as the RBI has now announced the launch of the first tranche of the sovereign gold bond scheme for FY24. And this means that you can invest in this scheme starting today, that's June 19th, up until June of 23rd. So what is on offer? Let's first understand that. Now, sovereign gold bonds are actually substitutes for holding physical gold. Each unit of the gold bond scheme is equivalent to 1 gram of gold. And you can easily buy gold starting from 1 gram of gold all up to a maximum limit of 4 kilograms, and that is 4,000 units of gold per financial year for an individual investor. Now, investors will be issued gold at 5,926 rupees per bond, and there's also a 50 rupees discount per gram of gold for investors who apply and who pay using the digital forms of payment. Now, the issue price will be at 5,876 rupees in such cases for individual investors who apply for gold online and who also make the payment online. Now, where can you buy these gold bonds from? Now, these gold bonds or sovereign gold bonds are actually sold through scheduled commercial banks, that's except any small finance banks or payment banks or regional rural banks. There's also an option that you can buy these gold bonds from Stock Holding Corporation of India, that is SHCIL, and then Clearing Corporation of India Limited, CCIL, also sells these gold bonds. Designated post offices also allow you to buy these sovereign gold bond schemes from them. And then there is the recognized stock exchanges, that is NSE and BSE, where you can apply for these gold bonds from. Now, what is the advantage of investing in sovereign gold bonds? Now, remember that the demat form of these bonds actually allows investors convenient holding of gold and thereby eliminates the risks regarding impurities, deductions, which are often associated with physical gold, and also theft concerns as well. Now, investors here also get a total value of 99.9% pure gold, which is actually held by the RBI against these bonds as well. And upon redemption on the 8th year, without any deductions, is the kind of total value that you get. Now, in addition to the market-linked returns on this precious metal, the government-backed gold bond scheme also gives you an additional interest at the rate of 2.5% per annum, and that is payable to you on a semi-annual basis as well. Now, what is a disadvantage of investing in sovereign gold bond? Remember that this form of gold is not as liquid as a physical form of gold, as sovereign gold bond scheme has a tenure of 8 years, with a premature exit option still available for investors after 5 years. Now, is there any tax that you need to pay by investing in sovereign gold bonds? Remember that one of the most significant advantages of this asset class is also the complete exemption from taxation on the capital gains, which is realized upon maturity after 8 years. However, the interest earned through this scheme is taxable, but it is also eligible for indexation benefits as well. So these are the current benefits for which you can actually go ahead and explore this form of gold in case you want to increase the exposure of precious metal in your portfolio.
If you like the video, do like, comment, share and subscribe.